I'd like to now hand over to Bill Payne, a true rock star of angel investment, who will suggest a fun table topic for lunch, and also note that at lunchtime we'll also be running another Show Gizmo poll. Thanks, Ray.
Thanks, Lou. I wanted to make an observation first. This is, I think, our 8th visit to New Zealand. I did a quick calculation. In the last 10 years, I've spent 10% of my time in New Zealand, and one of my observations is the Kiwi Angels and Kiwis in general are very humble people. We are really pleased and delighted that Jamie Rhodes from Texas is with us today, and he gave us some statistics that I'd like to help you compare to the Kiwi data that Deborah gave us earlier. Both New Zealand, well, first of all, Texas is one of the most active angel investment communities in the U.S. Yeah, we hear a lot about Boston and we hear a lot about Silicon Valley, but Texas has traditionally been top 3, 4, 5 states out of the 50 states in startups and angel investment. And Jamie's this morning told us that they invest about 100 companies a year and about $50 million bucks. Do you remember what Deborah said they invest down here? About 100 companies a year, about 50 million bucks. Now, okay, they're Kiwi dollars. They're a little smaller than the U.S. dollars that the Texans are talking about. In fact, everything's bigger in Texas. But let me show you, give you one startling statistic. The population of Texas is 27 million. The population of New Zealand is less than 5 million. So it is my opinion, and has been for a long time, and I've been trying to convince my Kiwi colleagues that you indeed are punching well above your weight in angel investing, so keep doing it. You're doing a great job. My real role in coming up here, before I stole the podium, was to talk about an exercise that we're going to ask you to do at lunch. And on each table, there's one table drop called Portfolio Strategy Alternatives. Now, we don't have a lot of data on outcomes, but we're getting more and more all the time, and that outcome data is helping us do a better job of developing strategies as angel investors. I think most of you have heard of the Wilt Bank study. Well, somebody did a Monte Carlo scenario on that data not too long ago and pointed out that if you make 6 angel investments, you have a 50-50 shot of getting your money back. 50-50 shot of getting your cash back. If you make 12 investments, you have a 75% confidence level of making the returns of the Wilt Bank study, which was 2.6 times your money back. Wow, difference between 6 and 12 is huge statistically. Make 48 angel investments, you've got a 95% confidence level of achieving the returns of the Wilt Bank study, which were about 25% IRR and about 2.6 times your money back. So let's talk over lunch. Share your portfolio strategy with those at your tables. And there are many of them, but let me just give you a couple. There are those among us who like to invest in a few companies at a time, get very engaged in those companies. I mean day-to-day engaged, not as the CEO, but as pretty much a half-time mentor with those firms, and they serially invest in maybe as many as a dozen or 20 companies over their lifetime, but a few at a time and very, very engaged. There are others who invest in a dozen or more companies but stick very close to their knitting. They really only invest in spaces that they truly, truly understand. And there are other fools like me who invest in much broader set of companies, but we do so either by investing in companies in spaces that we understand or with angels that we have a lot of confidence that understand the space that they're investing in. Now, and there are many, many other strategies. I think you've all heard of 500 startups. It looks like spray, a shotgun approach to angel investing. In fact, they really understand the verticals that they're investing in, and they stick pretty close to their knitting as well. So there are a lot of different strategies, but how are you going to achieve the returns of the Wiltbank study?